Did you know that the world is quietly moving away from the US dollar? A surprising revelation, isn't it? The US dollar, once hailed as the unchallenged champion of international trade, is facing an unexpected shift. This quiet revolution is called de-dollarization, a term that encapsulates the systematic move away from the greenback in global commerce. For decades, the US dollar has enjoyed an unparalleled hegemony, functioning as the world's reserve currency, a status that has afforded the United States significant economic benefits. However, as Bob Dylan famously sang, "The times, they are a-changin', so what's stirring the pot?" A medley of factors, emerging robust global currency alternatives such as the euro and the Chinese yuan are challenging the dollar's dominance. Add a dash of geopolitical tensions, a sprinkle of trade wars, and a generous helping of interest in decentralized digital currencies, and you've got a recipe for a global monetary shift. But here's where it gets interesting. As the world's reliance on the US dollar wavers, another historical heavyweight is flexing its muscles: gold. Gold and the US dollar have always had an intriguing dance. Historically, they've had an inverse correlation. As faith in the dollar weakens, the value of gold often strengthens. This relationship traces its roots back to the shift from the gold standard to the current fiat monetary system. Now, as de-dollarization gains momentum, we're witnessing a fascinating twist in this age-old relationship. Countries that turn away from the US dollar often turn to gold as a safe haven. Why? Gold is seen as a more reliable store of value, a financial life raft in the turbulent sea of currency fluctuations and political instability. So, the plot thickens. As the world turns its back on the greenback, another player is stepping up to the plate: gold. But what does this mean for the gold market? And how will this impact future gold prices? Stick around as we delve deeper into this glittering saga in our next scene. The golden age might just be around the corner. Gold, the timeless symbol of wealth and power, is making a comeback. This isn't mere speculation or a fad. Rather, it's a phenomenon deeply rooted in the historical relationship between gold and the US dollar, a relationship that's as complex as it is intriguing. For centuries, gold has been seen as a safe haven in times of economic uncertainty, a status it holds even today. But how has this status come to be, and why does gold's appeal seem to grow when faith in the US dollar wavers? Let's take a trip down memory lane. Once upon a time, the world operated on a gold standard system. Each dollar was tied to a specific amount of gold, giving the currency its value. However, this changed in the 20th century when we shifted to a fiat monetary system, where the dollar's value is not backed by physical commodities, but by the trust and confidence of the people who use it. Now, here's where it gets interesting. As we've moved away from the gold standard, we've seen an inverse correlation between the US dollar and gold. When confidence in the dollar decreases, the price of gold tends to rise, and vice versa. It's like an economic seesaw of sorts. Why does this happen, you ask? Well, think of it this way. When faith in the dollar wavers, people start looking for other places to park their wealth. And what better place than the tried and true gold, a tangible asset that has stood the test of time? Economists and financial experts have been observing this phenomenon for years. As the dollar's dominance on the global stage is challenged, gold's allure seems to shine brighter. Its glitter is not just a reflection of its physical properties, but also an indication of its increasing value in an uncertain world. So, as we witness a systematic shift away from the US dollar in international trade, don't be surprised if you find more people turning to the yellow metal. Gold, it seems, is more than just a precious commodity. It's a beacon of stability in a rapidly changing economic landscape. As the US dollar's star dims, gold's allure shines brighter. But what does this shift away from the US dollar mean for gold prices? You might ask. Well, let's delve into that. Imagine a seesaw. On one end, we have the US dollar, and on the other, we have gold. As the weight of reliance on the dollar reduces, the gold end rises, signifying an increase in demand and consequently price. It's a classic case of supply and demand, but with an added dash of global economics. As countries begin to question the dollar's hegemony in international trade, they look for alternatives. And what's shinier and more reliable than gold? Its glittering appeal isn't just for aesthetics. Gold has long been a safe haven for countries during times of economic uncertainty. As the US dollar wavers, countries tend to turn to gold, a tangible asset with an intrinsic value that's endured for centuries. So when we talk about de-dollarization, we're also inadvertently talking about a potential surge in demand for gold. And what happens when demand increases? You got it. Prices tend to rise. It's not rocket science, it's just good old economics. But let's not overlook the role of economic strategies in all of this. As countries systematically move away from the US dollar, they're forced to rethink their strategies, and gold often emerges as a beacon of stability. It's like that trusty old umbrella you reach out for when the weather forecast predicts a storm. And just like an umbrella shields you from the rain, gold offers protection in times of economic turbulence. It's a safe haven, a buffer against market volatility, and a reliable store of value. It's no wonder then that as the world moves away from the US dollar, the allure of gold intensifies. So, the next time you think about gold, remember, it's not just a shiny metal, it's a symbol of stability, a safe haven in a sea of economic uncertainty. In a world moving away from the US dollar, gold stands as a beacon of stability. So, what does the future hold for the shiny metal? As we navigate the ever-evolving financial landscape, one thing seems almost certain: gold is poised to shine brighter than ever. The future of gold is looking promising, and is not just because of its glittering appeal. With the ongoing shift away from the US dollar, the demand for gold is expected to soar. This is because countries are increasingly viewing gold, not the dollar, as the ultimate safe haven. This heightened demand could drive up gold prices, making it an even more valuable asset. But this surge in demand won't be the only factor influencing gold prices. Let's consider market volatility. As investors adjust their portfolios due to the increasing prominence of gold, we could see some turbulent times ahead for the gold market. This volatility, though, is a double-edged sword. Yes, it can create uncertainty, but it can also present opportunities for savvy investors who know how to navigate the market waves. Now, let's not forget about inflation. It's a word that sends shivers down the spines of investors and economists alike. But for gold, inflation can be a boon. You see, as inflation erodes the value of currencies, gold often shines through as a reliable store of value, its price typically rising in inflationary times. So what's the bottom line? Well, the future of gold is intricately tied to the process of de-dollarization. As countries continue to move away from the US dollar, we can expect gold to play an increasingly pivotal role in the global economy. This shift could see gold prices rise, influenced by increased demand, market volatility, and inflation. But, as with any economic forecast, we must always remember that the future is not set in stone. The journey towards this golden future will be as unpredictable and twisty as a mountain road, with numerous factors at play and potential surprises around every bend. The future of gold is as bright as its gleam, but the journey there will be as twisty as a mountain road. So, where do we stand in this golden landscape? Let's take a step back and look at the bigger picture. We've traversed the historic path of gold and the US dollar, delved into the dynamics of de-dollarization, and glimpsed the future of gold. It's clear that the world is in the midst of a significant monetary shift. De-dollarization is not merely a buzzword, but a systematic move away from the US dollar in international trade. This shift is challenging the hegemony of the US dollar, causing ripples in the power dynamics of the international monetary system. As nations gravitate away from the US dollar, they're not just falling into the embrace of other global currencies such as the euro or Chinese yuan. they're also turning their eyes to gold. This precious metal, with its millennia-long history as a trusted store of value, emerges as a safe haven. And what happens when demand for gold rises? You've guessed it, gold prices soar. This trend is not just a footnote in economic textbooks, but a tangible fact that's reshaping global economic strategies. But what does this mean for you, the investor, the economist, the curious bystander? It means you need to comprehend the complexities of this correlation. Understanding the relationship between de-dollarization and gold prices is not just about gaining knowledge. It's about equipping yourself for the future, a future where gold's prominence could cause market volatility as investors adjust their portfolios. Inflation, that old nemesis, also plays a role here. As the value of money fluctuates, gold stands resolute, often even gaining value. This adds another layer to the intricate dance between de-dollarization and gold prices. In conclusion, de-dollarization signifies a distinctive dynamic shaping the global economic landscape. Future gold price fluctuations will be significantly influenced by this ongoing shift from the US dollar. As the world spins on its axis, the economic axis is spinning too, from the US dollar to gold. And that, dear viewers, is worth its weight in gold.